Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. Today is Wednesday, January 10th, 2024, and this is Blockhead Traders Weekly. In this week's episode, they did it. They finally did it. Today was the day that the SEC approved the first round of Bitcoin spot ETF. Gary Gensler's best ETF yet. I think those were his exact words when he announced it. He said, "This is my best ETF yet." But before we hop to that content, I want to give a shout out to our Discord, a link in the description below. You can hop in there, say hello to myself, Viper, some of the other Blockhead traders. Love to hear what you're trading. Love to hear what type of content you want to hear about. Also, you can go to thetagang.com/sprocket888, where I post each and every one of my equity trades, the good, the bad, and the ugly. Last, you can pick this up in an audio-only format wherever you get your podcasts. And if you look and can't find us, let us know and we will get it there. But let's hop to this week's content. Viper, before we hop into the big news, the ETF, spot ETF of Bitcoin, I do want to say, whew, was I relieved at the end of last week. So back at the beginning of December, mid-December, December 11th to be precise, I entered into a strangle on the Russell future because the Russell was kind of slowly climbing and its volatility was starting to get stretched just a little bit. Not a ton, but it was at the top end of its RSI value. It looked like it was approaching a level where there was a potential for rejection, but I still thought the market was going to go higher. So I felt pretty confident in a strangle. And I want to pull you up a Flappy Bird chart because remember, a strangle is an option trade where we go on the top side and bottom side and basically say, this thing's going to trade inside a range. And so if we hop over here and we pull up this chart, this is quite possibly one of the worst approaches that the Flappy Bird can take when he's trying to get through that channel. So you can see right here, the start of this red is where I opened the trade on December 11th. And I thought, yeah, this is going to burn nicely, my theta. And just a few days into it, look at this candle, wham. Like, I don't know, somebody hit the up on the controller and that Flappy Bird just started flapping and went way up. He thought it was Mario trying to go up the tube. And let me tell you, on a futures trade and options, this one was getting ugly. It went almost $100. 1990 was my top end strike. And so basically in the red, either below or above, that's where I'm not winning. In between, that's where you win. So I just stuck to my conviction that the law of probability was on my side, even though it sure as heck didn't look like it. And then sure enough, we started getting the easing. I don't know if everybody started, going home for their Christmas holiday and just forgetting to prop up the market. But just before expiration, we got a whoop drop below, and bingo bongo, that was a ring the register at almost 90% potential profit. So I was feeling good ringing in the new year on like January 3rd is when I closed this thing out. Or sorry, January 4th.
Snuck it in. So what was the worst case scenario you were looking at? So because this was a strangle, you just would have been stuck with premium you paid, or what did worst case scenario look like?
So worst case scenario was I get assigned the Russell's future. So going into the strangle assignment, I was okay to take. And I was really questioning that. Are you really sure you're going to take assignment as we're approaching up here to 2100? Because in the options, I got assigned. So I keep my premium. That premium I collected, I keep that. But if we're in the money, then somebody says, hey, those shares of Russell you told me you'd sell me for 1990? Well, I want to buy them for 1990. And so I would have had to sell a Russell future, a full Russell future at 1990. If somebody, well, one, there's no such thing as early exercise on futures. But if, the price hadn't come back down, I would have been short a Russell future up here because I didn't have one to give, and it just would have been a big drawdown on the account. And if this would really just keep running, futures can really get away from you. So I was really rethinking my life choices there for a little while. But enough about that stuff. That was just a little thing I did at the start of this year, end of last year. What we really want to hear about, Viper, is the senior Blockhead Trader correspondent, Viper XL 007, back from the front lines of the crypto news. I heard something about Gensler going to tattoo Bitcoin on his arm or something to that effect. I'm not sure.
I mean, starting the new year, everybody that works at the SEC gets 1 Bitcoin as a Christmas gift.
Ooh, that's why they approved it now. I get it.
He didn't want to give an unapproved security. But yeah, today was the day in the most comical fashion that the entire crypto industry has been waiting for. I mean, me personally, since I found out about it, which I think we talked about on the show, I don't know, a year and a half ago, something like that. But that is the Bitcoin spot ETF, which is official approved, and CBOE says trading will start tomorrow, which would be Thursday, January 11th. I assume
worst kept secret on Wall Street.
Yeah. I assume on the, I don't know. I don't know if I should assume on the bell, because typically, I mean, like IPOs tend to open at random times in the morning after the dust settles. So I don't know when these are going to actually start, but tomorrow's the day. And yeah, the worst kept secret, because, what people are joking as the SEC intern pushed the message yesterday that it was approved. So the timeline of events yesterday, the timing was like exactly when you would expect it. It was towards the end of the day, towards the bell. And the official SEC Twitter account tweeted out a picture of Gary Gensler and a quote saying, "Today we've approved yada yada yada." And everybody went nuts. It's true. It's done. And then like literally 12 minutes later, Gary Gensler tweeted from his account that said, "The SEC's Twitter account has been compromised and no ETFs have been approved." And then like 10 minutes after that, they said, "Okay, we've regained control of the account and we've deleted the message. We've deleted the tweet." To which obviously there were lots of reactions like, "Hey, that's the fastest we've ever seen an account get reclaimed." And so, I mean, there was some speculation. The theory that I think is the most likely is it did seem like there was so Twitter or X or whatever, the security team looked into it and they put out a statement that said, "We looked into it and there was no compromising of any of the Twitter systems, but they suggested that it was some sort of a two-factor authentication type of situation, or maybe the old you left your phone open and some staffer wanted to play a little prank," which to me, not that it means much of anything to me, that seems to make sense, because apparently there was a quick tweet of just $BTC. But then that was quickly deleted and then the image was posted. So the theory is whoever did it posted BTC and that was going to be the meme, but then they got in the account and they saw a scheduled tweet for today and they were like, "Ooh, let's push this now." But whatever the case, we got a little preview of what was about to happen almost exactly 24 hours later. And now maybe the SEC should investigate themselves for market manipulation.
Yeah, who watches the watchers here?
Exactly.
Gensler holding all this ETFs.
So, but that brings us to a couple points now of what the heck happens now. What does this mean to any of our viewers who have just been heads down in the equities world, maybe observing crypto, but certainly never wanting to go into the depths and do a wallet and all that sort of stuff. So what I thought was interesting in the official statement that Gary Gensler put out today, there were a couple of things that I thought were noteworthy. One was he basically said in his official press release, he said that today we've approved these ETF products, ETPs, and he said that they look exactly the same as they did when they denied them. But he basically said, but the circumstances have changed, and he quoted the I think it was the District of Columbia court, whatever court it was that I think we covered it on the show when they shot down the SEC's challenge. When the SEC first denied the ETFs, and then that ruling got challenged in court, and the judge said no. The SEC told the SEC that they don't have enough grounds to uphold that ruling, and so they needed to allow the submission back. And I think we talked about on the show that was relative to the fact that there's Bitcoin futures already, ETFs already traded. That was quoted in the judge's ruling of that. So basically, Gary said, hey, this is the same exact thing we denied previously, but circumstances changed. The court said, you can't do that. You need to rethink this. And so we figured it was now going to be the smoothest path to approve this. And then there was a tiny little footnote that says we are not approving or condoning Bitcoin itself. And they said that basically they still don't like it, but it is what it is, and you should exercise caution.
Which I thought that was a weird footnote, to be honest. I read that very briefly, and I didn't get a chance to go back through and look, but like, how often do they approve an ETF and say, well, we just like to let you know the SEC doesn't condone the trading of, green energy stocks below. Like how often do they ever approve or condone the underlying thing?
And that's a good point, because I think I know it was another commissioner. Therefore, I must assume it was Commissioner Pierce, because Commissioner Pierce has been very pro-crypto advocate, but she pointed out that footnote and basically said, like, what are you doing? You just admitted that you're emotionally, your decision to deny this was potentially some conflict of interest of, you have these personal feelings or whatever, which was an interesting point for sure, because I guess I see it both ways a little bit. I mean, I definitely lean towards that side of, like, that was a weird thing to say. That's not your job to express your opinion or anything like that. But if I'm giving them the benefit of the doubt, then I would say a big motivator to that is this has, I don't even know if I want to say this, but it feels like this has the potential to be more volatile than other ETF products. That could easily be debunked. I'm just kind of saying that off the top of my head, given what we know about the volatility in the crypto space. So if there was any quote unquote good reason to exert such opinionated force, I would say it's potentially because he really, really wants to make it clear that there's nothing about this ETF that's going to be smooth sailing. I mean, we are coming off of the bear market where the price of this underlying dumped some 60-70% just in the span of 8-9 months, whatever. So but I mean, that's the game, that's investing, that's the stock market. Anything can dump that much. I mean, it was weird, but I think that is a point that I would certainly express to anybody considering getting in, is there's a lot of volatility to consider here. And you just need to accept that. The fact that it's an approved security, you have that quote unquote consumer protection, that the due diligence has been done by the SEC to assure the safety of funds and all that kind of stuff that we've talked about many times on previous episodes. But there is no such thing as protection against volatility. So if it were up to me to guess, I'd say maybe it was something around that was coming to mind. So on that subject of volatility, I wanted to kind of retouch on Captain Options over there. Because people that maybe don't know options as much, or certainly even myself, like I think of a volatile underlying, and then the first thing I think of is like, oh man, this could be killer for options plays. Is that true or not true? And kind of do you have any expectations of how options plays might play out to this? Obviously, specifically to your own strategies, but I have an additional scenario I'll go over after that.
Yeah, it's something I'll keep an eye on. But it's like I said in the previous episode, actually last week when we kind of talked buy the rumor, sell the news, I think it was, we talked about some of the options on ETFs, and I won't say there's a ton of traffic on the options on ETFs. So even though the stock might have a lot of volatility, or the ETF itself might have a lot of volatility, I'll really see what happens in the options chain, on what type of liquidity it is there, and what does the volatility of that option chain look at. It will be really interesting to kind of play, because I've always kind of wanted to sell premium on crypto options. The closest is Bitcoin futures, but actually I don't know if it's a TD Ameritrade thing or what, but they don't actually, I can't trade the options of them. And even if I could, they would be way, way, way too big. I can't remember how many Bitcoin, I think it's 5 Bitcoin is a Bitcoin future. And so, at $40,000, you're talking about $200,000 of underlying potential. So it's just too big. I mean, there's a micro Bitcoin futures, but yeah, so I am kind of interested in that angle to see. It's possible that there actually won't be an option chain for these for a few days. When an IPO comes out, sometimes there's an option chain available right away. Sometimes it takes a week. I don't really know what the threshold is. I feel like I've looked it up a few times, but it'll be something I look at, because it's probably going to be affordable to play. You won't have the span margin of futures, but what you will have the ability for is you'll basically be, depending on how they price their ETF, but let's say the ETF is $20, right? They can make the ETF price whatever. And that's kind of the nice thing about ETF, is they kind of abstract out and kind of divorce a little bit the price you pay versus the underlying value, right? So maybe it's a $20 ETF, and one ETF gives you access to 0.005 Bitcoin or something like that. So depending on how they price that, the options chain will definitely be 100 shares of whatever. And so the notional value of that option will be 100 times whatever the price is. And so depending on where those come in at and how they price them, that could be a very interesting way to speculatively feed on that volatility of the underlying spot crypto market. And it's only Bitcoin spot that's been approved. Right. No other Ethereum or anything else, but so it's definitely an option. It's definitely a thing I'm going to watch.
Gotcha. And so one thing I see a lot of people do in options, very much more on the speculative side, because I know it's definitely not your bag of tricks, but I see a lot of people doing buying calls deep in the money. So I mean, like a year, I guess it's usually about a year out or something like that. Does that, I mean, I guess this is also just a broader question on anything you know about that strategy in general, but I assume in the case of this, and I guess what I'm about to say probably applies to any asset that you would buy deep in the money like that, but you're expecting a large appreciation of value in whatever you're buying deep in the money to potentially capitalize on that dramatic price growth while paying just a small upfront charge, whatever, for the contract today. Is that, I mean, first, is that how it works? And does the fact that this is a volatile crypto asset change any of that, either in your own strategy or just how you see that strategy continuing to work?
No, that's a pretty valid strategy. In fact, if you want to go buy options, here's why they do that. If you recall, and what we've talked about is you have a time premium associated with options. And that time premium is the highest at the money. So when you have the underlying price at, let's say it's trading at $50 and you're at $50, and that's going to be the highest time premium. And then think of it like a bell curve. The farther away you get from that $50, the faster that value goes away. And so there's less time premium. So if you don't, and remember, time premium evaporates. When the option expires, all the time premium is gone. So you have two choices if you don't want to pay time premium. You either go really, really high out of the money, or you go really, really deep in the money. Because at both ends there, your time premium is very, very small. So you're not paying for what you're going to lose at expiration, you're not paying that much for. So play it out to expiration. If you bought the out of the money option and we approached expiration and you didn't make it, let's say it still stayed out of the money, you've lost 100% of your bet, okay? Because all the time premium is gone, it's expired, it's worthless. Now, let's say you bought very, very deep in the money and you were right, it went up, okay? So let's say we went from $50 to $60, but $70 would have been the out of the money call. So when you bought that in the money call, you don't pay much time premium, but you're going to pay a lot of intrinsic value. So let's say you bought at $10. So you bought $10 strikes in the money. You probably paid about $40 and maybe a couple pennies for it. So the $40 is the intrinsic value of that option. And what you can do then at expiration is you still have all that intrinsic value. So you didn't get to 70, you got to 60. But now your option is $10 more than when it was before. So you paid basically $40 of intrinsic value, and now you got to 60 and you have $50 of intrinsic value. You can sell your option at that point. You can exercise it because you're in the money and you get that money. So it's a way to bet bullish. It's basically synthetic long on the stock. And the reason they do that versus just buying the shares outright is because you get a little bit more leverage. Your buying power reduction is maybe slightly less than longing the shares when you get the option deep in the money.
Yep.
That's because it's a static amount. And so you don't ever have to, your margin for holding the shares doesn't ever change because you're not holding them. You're holding an option that represents them. So in a normal equity, if you would have bought those shares, when you go from $50 to $60, yes, the price appreciates, but you have to put 50% of that like on margin, right? It's just the way the broker kind of calculates that stuff. So that's why people do it. It's a cheaper way to synthetically long a stock.
Gotcha. All right. So that makes sense. So in the event of, kind of what you said about needing to, for your strategy for premium selling, needing to see the chain, if there is a chain or whatever, watching it play out and whatnot. Assuming obviously that this is a hotly anticipated ETF options chain, the type of people that are in crypto are probably in equities to some extent and might want to leverage that deep in the money call buying. Does the presence, let's just assume for a second that a ton of people are going to show up to do that, to buy calls, all over the place or whatever. Does the fact that so many people show up, is that, a mechanic of the system that it then in turn helps your strategy with liquidity, since you're on the opposite side of that equation trying to sell people that? Or is that not quite how the premium is priced?
No, it is. That's some of that comes in, right? So the premium comes in on the volatility of the option, which is loosely based on the volatility of the underlying. And so what will likely happen if there's a lot of uber bullish people, you actually don't get a ton of people, at least I don't think you do, that buy lots of in the money calls. It just doesn't really happen that much. You get a lot more speculators because remember, when you buy in the money call, you have to pay for all that intrinsic value. And when you get people in there, they're like, do I want to pay $40 for this thing? Or how about I just go pay 5 cents for this $70 one because we're going to the moon. And so you'll get a ton of people buying those out of the money calls, hoping for the moonshot. And That will likely also drive price up. It creates a lot of call skew and things like that. So that's definitely something that will generate premium imbalance. So normally you're slightly balanced with a little bit more premium on the downside, because usually in a traditional thing, people are trading options, buying options for protection. But when you get it on the call side, you get higher premiums on the call stuff, and those will actually contract way faster if price starts declining or volatility starts coming down. So what I will likely look at doing actually in that type of environment is, because calls have so much value, I probably won't sell the call naked. And the reason for that is because you can really get burned if the market is still irrational longer than you can remain liquid. And so I would get into maybe selling a covered call, where if I'm pretty confident that we're not really going too far south, but I don't want to get into a position where it's a runaway price from me. I might sell a covered call where I'm protected if we go to the moon, but I'll still profit if we go nowhere or slightly down. And that lets you capitalize, because you're selling the call side in a covered call. You're selling the side that has the imbalance of premium, which is why I would consider that. And
Gotcha. So the other thing I wanted to talk about with this is what makes this the riskiest episode ever is what happens now, because just kind of where we see things going from here, and that makes it risky, because the viewers watching this are going to immediately know, fact check us and hold us.
Hey, it's not where is it going now, it's where did it go between when you said that and when they heard this. That's it will have already gone.
Exactly. So I mean, what are your thoughts on the effect of the ETF? I mean, I'll just leave it at that. The effect of it on anything.
Yeah, I mean, I think we're going to get a lot of people buying this stuff. I just do. I just think there's a lot of people. I have people in my office who know that I've been trading options, trading stock. They know I monkey around with crypto, and they're like, I don't understand that. I don't understand that. But I'll tell you, since just before Christmas and just coming back after the holidays, there's a lot of people going, hey, I'm going to get one of those ETFs. Like, I just think there's a lot of buyers that are going to pour into this stuff. And I think that's going to drive some short-term price appreciation. It's going to gain awareness in the space. It's going to attract regulation. It's going to attract legitimacy. It's going to attract big money. Is it really going to the moon? No, nothing ever goes to the moon. We're going to get a pump out of it. Are people going to get bored of it eventually? Yeah, I mean, sure. So I don't know. That's my take on it. Is I do think there's going to be. I think it's going to be positively received. I don't think this is going to be any sort of run for the hills moment. I just think it's another stepping stone in that legitimacy of the crypto space, and it's going to be a left foot, right foot thing. And there's not going to be a, wow, we just climbed a mountain in a day with a single bound. I think it's going to be hyped that way, but I think it's going to be yeah, we're progressing normally.
Yeah. In general, I definitely agree with that. I mean, to me, the interesting thing, the fascinating thing is just, this is a huge step towards, like you said, legitimacy of the space, but also just the creation of an entirely new asset class. And we obviously have had some degree of it in the past, like we said, with the futures ETFs and whatnot. But I mean, now that it's a spot ETF, like, it's just the continued development of an entirely new asset class. The parallel, the analogy is probably grown pretty long in the teeth, but I mean, it's like when gold got its first ETF, as far as bringing in this completely other thing, to the market. But in general, I agree. I think it's a very positive effect on, as far as price appreciation on the long term. what'll be most interesting that the viewers watching this will have already seen, and they can just go pull up the chart and see it. But now in our current state point in time, what I think is interesting is the unknown of that short term, what's going to happen, because, there's obviously the three cases I see are nothing happens, or a lot of stuff happens, or, dumping happens. So, obviously the nothing happens could be that the narrative just isn't, like you said, it's definitely picking up where people that don't normally talk about it are talking about it again, but not to a significant degree just yet. This could obviously change that, because this will be all over all the shows, all the financial shows and whatnot, I'm sure tomorrow. But it could be nothing because just the narrative isn't there yet. People just don't care. People still don't like the space and all that kind of stuff. So there could be some of that of like, oh, that's cool, you can do that, but I cared about that in summer 2021 or 2020 that everybody was talking about it. But at the same time, I'm personally excited for it because I'm looking forward to just, taking I'm on the order of 2 to 5% of my retirement account that I'm pretty excited to just kind of carve out and drop into one of these ETFs. There's obviously, this is a pause tangent of you should look into the prospectuses of the different offerings. I think they all updated at the last minute. They all kind of updated their expense ratios to be very competitive to each other. But last I saw, the grayscale one was still way high on that expense ratio. So I still need to look at that stuff before, actually choosing one as far as what is this going to cost me. That's an important thing you need to look at, as we've discussed on the show for ETFs. But I'm excited to just carve out a portion of that, this retirement money, this money that I'm not touching for 20 plus years, and just kind of set it and forget it kind of thing, because I do believe in the long-term price appreciation and exposure to it and whatnot. And so we'll say bullish case is how many times, how many millions of times is that going to happen tomorrow? Like people just saying, hey, just this little, 1, 2, 3, 4%, I'm just going to carve it out and put it in there. So I think tomorrow is going to be very interesting, as far as, does it have any effect on price or what happens? Because the last thing I want to point out, and I'll jump to my chart for this one, we talked about buy the rumor, sell the news. That's a very well-known human behavior. Obviously, the theory of it is that when something is rumored, like this ETF coming, there's all this rumor and hype and everybody's buying in. And to be fair, the past year of Bitcoin is up something like 120%. So there's a very solid argument to be made that people have been buying the rumor for an entire year now. What I've kind of come to conclude is, because, let me finish that thought. So you buy the rumor and then the news happens and there's nobody left buying it. And so everybody that's been buying for that 120% run just starts selling, and that's where you get sell the news and you get the negative price impact and things like that. So where I'm personally at on that theory as it relates to this specifically, is one of the things that I think is interesting is in a normal buy the rumor, sell the news situation, everybody that's participating either in the rumor buying or selling or, waiting to buy on the news or anything like that, they all have equal and equivalent access to whatever it is the whole time that's happening. In this particular case, anybody could buy Bitcoin at any point over the past year if they wanted to, but it was more technically advanced to get a wallet set up to go buy it and all that kind of stuff. So to me, what'll be interesting is, does that mean that the people that have been buying the rumor is a much smaller subset, and the people that will now be able to buy is a much larger one? So anybody selling the news is just going to be selling right into the people buying, come tomorrow or something like that. I think that's going to be my most interesting dynamic is how that happens. And so kind of what I wanted to show on the chart of yet one more dynamic is this is obviously all very Bitcoin focused, and it's not a whole crypto thing, just like you were saying earlier, that this is only Bitcoin. And for the past year, it's largely only Bitcoin that has been steadily gaining. So there's also the aspect of, if it's this smaller subset of people that have been buying, obviously as it pertains to the price of Bitcoin, everything I just said applies. The one selling, it sells the price of Bitcoin and whatnot. But the people that have been buying for that past year are fairly blockchain savvy, aware of how to move around on chain and everything like that. So where they go when they sell, I think, is also really interesting, that I will be watching. Because, this is not an exit crypto scenario. This isn't we've peaked and now I just need to take this money and go back to equities or lock it up in the US dollar or something like that. So I'll unpack that just a little bit more in just a second. So what I wanted to show here on this chart was, you could probably even just tell looking at it, where was the fake announcement and where was the real announcement? And so we have the fake announcement was there and the real announcement was right here. And so what I thought was really interesting, aside from just this whipsaw of, pump, and then this was like a 6-7% dump, and then we kind of stabilized out. But what I thought was even more interesting is just we're flat. From the before times to the fake to the real news to currently right now, the price is just flat. Obviously, the ETF is not trading right now. It's not live yet, so none of that impact is here on my chart. But as far as the people who are here now, trading the news, buying the rumor, they did their thing, and now it's just flat. So what I thought was really interesting to this is I was like, okay, so now unpacking the rest of that thought, where do people go when they sell Bitcoin if they're blockchain aware? And that is this whole trickle down rotation of capital where they take their profits and then they go into the altcoins. And for all intents and purposes, we'll just focus on Ethereum because everybody's heard Ethereum, and that is kind of the headwaters of the rest of the altcoin market. And so if we do the same exercise over here on Ethereum and we look at where was the fake announcement and where was the real announcement, now all of a sudden it looks like Ethereum's getting a whole lot more to gain from the situation. And then it's even more amplified. One of my favorite charts is just pairing two assets together. So this is ETH BTC. So this is just, saying the strength of Ethereum versus BTC versus Bitcoin. And so we can see on the fake announcement and the real announcement that just ETH is just marching up. And so that's not really saying anything other than I think it's interesting data that the people selling Bitcoin, selling the news, are using that as an opportunity to rotate those profits down deeper into the ecosystem, which kind of plays to what you said earlier as far as it being a generally positive effect on the crypto industry at large, even though this is just a Bitcoin focused ETF. But that's what I'll be watching, is just to see how that continues to play out. I think it'll be an interesting dynamic.
Yeah, I actually think what you could be seeing there with the ETH is buying the rumor, right?
It's true.
So, okay, Bitcoin's out of the way. What's next? ETH. Okay, let's start getting over there. Let's get that hype going, because that is really the next area of crypto that's next in line to have a spot ETF.
Yeah, no, that is absolutely true, and a good point that it could be the start of that hype wave. Because I know Grayscale, I believe it was, or BlackRock. No, I think it was Grayscale. They released just last week. They released their updated. They're actually going to create and I think this is just for institutional investors until the rest of these ETFs get approved. But Grayscale has had a Bitcoin, a spot Bitcoin ETF for a while now. But it's only been available to accredited investors and all that sort of stuff. So GBTC is what that ticker is going to be. And they're transitioning that to the NASDAQ, the NYSE listed spot Bitcoin ETF. But they have another ETF product, which they call their, now I forget, but it's basically a crypto index. And so they have a basket of assets, of crypto assets in that ETF product, which Ethereum is in, plug to Avalanche, that's in there. But that's absolutely the next narrative is, all right, we popped the seal, so where are we going next? And Ethereum is definitely the most obvious next stop to a lot of people.
Yeah, Viper, you touched on something a little back there when you were kind of going through about looking at the prospectus and knowing what's there. That's one of the pieces, I'll be honest, I haven't read deeply in, and I would strongly recommend that everybody read that stuff, because there is a different hypothetical risk here that I think doesn't really exist in other types of ETFs. And what I mean by that is these ETFs are representative from something that doesn't trade on the open market from a equity standpoint, right? You're going into the crypto space. So these BlackRocks, ARK Investments, Grayscale, all these ETFs are going to be representing their spot price, I would assume, with actual holding of Bitcoin, digital asset Bitcoins. So that means they're going to have wallets. That means they're going to be buying and selling and in and out of these wallets. So there would be a real risk here on if one of those firms lost their wallet, or what if their wallet was compromised, or some internal threat actor emptied that wallet, right? So what happens to that ETF value? Because the ETF is really representative of the underlying way that the fund manages itself. And so this is an interesting risk that is going to exhibit, I think, in these particular ETFs versus something that's like an ETF of like the SPY, right? Where it's a representation of Facebook stock and Microsoft stock, right? It's not so much of, oh my gosh, we woke up this morning and all our stocks were gone. Where did they go? And so this is a little bit different, and I don't know the mechanics of each of those or what happens, but I would strongly caution everybody to look into that before diving in.
Yeah, absolutely. And driving that point, if you're buying any of these ETFs, even though technically you should not mentally be thinking that you're buying Bitcoin directly. You're buying a product that somebody else is going to manage for you. And that's where understanding that prospectus is critical and key, because it's what we talk about all the time on the show as far as knowing what's behind the curtain, knowing what's happening. And this is where, in the world of crypto, when we talk about all these different crypto projects and things like that, like it's hit or miss whether or not you can know what's going on behind the curtain, whether you can trust it or things like that. And again, that's part of the job of regulation, is to ensure your protection by checking behind the curtain and making sure that everything's above board and all that kind of stuff. So I can say, to the point of the wallets and things like that, the thing you're going to want to look for in any prospectus, all prospectuses, is compare what their custodianship agreement is, because they do all list what their custodianship plan is. And as I understand it, none of them are actually holding the Bitcoin themselves in a wallet. A wallet that they have custodianship of. Most of them are actually using Coinbase as their custodian, as their named custodian. And so now all of a sudden, we start to see the puzzle pieces come together, as far as, we've talked for the past year now about how the SEC was going after exchanges, cracking down on the Kraken exchange and on Binance and on Coinbase themselves and things like that. And we've talked to a long extent about that's just the SEC's job, and a centralized exchange is well within their purview. But we certainly see now exactly why they were on that warpath, because, I don't remember which one it was, but let's just say Grayscale. Grayscale listed Coinbase as their custodian. These applications for ETF have been filed, I believe, for a pretty long time. And so the SEC has known for a while that Coinbase has been listed. And so they were doing their due diligence to go into Coinbase's filings and all their details and trying to make sure that customer assets were not being commingled with other assets. Now we can see why that's so important, because you open up the doors to all of this ETF trading. And if those funds are being flowed into an FTX situation where it's just free willy-nilly, all, we're going to send the money wherever we want, that's terrible, because then you have no backing to your assets. So absolutely dig into the prospectus. Custodianship is one section that you're really going to want to study, because like I said, it's going to lead you down a rabbit hole, because they're going to list somebody else that they're trusting to hold this. So then you need to go look at that. How does Coinbase hold these things? And Coinbase is a publicly traded and regulated U.S. company, so they have documentation that you should dig into as well. And that's just what a good, healthy process should look like.
Well, that brings us to the end of this week's episode. It's been a long road. It's finally here. All of the speculation that we have laid forth in the past, we will see if we were right or we wrong. Were we spot on? Were we, not even closer in the same ballpark? So tomorrow will be interesting. Of course, when the time you hear this, you will have already known. So the riskiest episode ever will already be out there, and it might not age so well, or it might age beautifully. Time will tell. So good luck out there. If you're going to go out and scoop up some of this Bitcoin ETF, don't forget to read the prospectus. Don't ever let your guard down. Make sure you know what you're investing in and what are the mechanics that make it tick and make it go whir. Aside from that, don't always forget to think outside the block.